On Thursday, I looked up from my desk and about half the sales team was gone. And I looked over to the account executive that I was working with, like I was, setting the meetings for him, and his head was in his hands, and he was shaking a little bit. And I was like, Devin, are we late for a meeting? Like, what's going on? And he said, No, Dan, half the team got laid off.
Hmm.
And I didn't. I was like, we were just at the ribbon. Like, what are you talking about? So I was like, okay, this is a good time for a well-timed joke. And I said, well, good. We've been working so hard. We deserve time off. And it's like,
Welcome to the Xplor Show, where we dive into the worlds of entrepreneurship, real estate, and motivation. Each week, we bring you inspiring conversations with people who are exploring new frontiers and shaping the business world. Thank you for tuning in. Now let's get to the show. Hey, welcome back to another episode of the Xplor Show with Scott and Ryan. Scott, good to see you.
Ryan, good to see you as always, man. You need to get rid of that beard. That thing is hideous.
Oh, come on, man.
I think it's time.
I don't know. We'll see.
I dig it. I dig it. I know you haven't introduced me yet, but I dig that beard.
No,
Hey,
you need to
thanks,
get rid of
Dan.
yours too. At least shave it down. No, I'm just kidding.
Well, hey, we got an exciting episode on today. We got Dan from Resilient REI. You probably know him from Twitter and all his social medias. Dan, thanks for coming on. Why don't you give us a little intro about
Dan,
who you
welcome to the
are and
show,
what you
man.
do?
Ryan, Scott, thank you guys so much for letting me hop on. Just a Chicago guy out here is talking about real estate. I'm glad that you Kansas City boys aren't afraid of us, even though we should have gotten your quarterback, way back
No,
when.
dream on, bud.
But
I
anyway,
don't
so
think Chicago will ever get to live that down, by the way.
no, we won't. But here's the thing, though. It's all for the best because we got Justin Fields. And Justin
Oh,
Fields
yeah, he's
is,
been doing real good. Yeah. Let's see.
yeah, we got the number one overall draft pick. We were smart enough to trade down. We're going to be all right.
We'll see what happens.
But you guys asked what I'm doing. I'm a real
Yeah, tell
estate
us a little bit
nerd.
about yourself, kind of who you are, what you do, and what got you into the space.
Absolutely. So I'm like I said, I'm a little bit of a real estate nerd. I've been in the space for about 6 years. The first 3 years were me just grinding it out as a new college grad, just learning the ropes on finances and living on my own and all that stuff, and studying real estate real hardcore. And then after that 3 years, I ventured into the operational side of it, where I started buying rental properties. I've got 4 properties up in Milwaukee. We're working on finishing up a house hack out here in the suburbs that we're going to be moving into in a couple months. And in my spare time, I run the Resilient Real Estate Investing podcast. We got a Twitter. We have a whole bunch of other socials, which I'm actually taking a little bit of a strategic pause on, and maybe that's worth discussing later in the show. But really hammering on my podcast and making sure that I can provide the best real estate content possible for everyday landlords, people who are as big of a nerd as I am when it comes to single family, short-term rental, wholesaling, and small multifamily.
What brings the passion or the drive to want to provide all that social content?
I think that so maybe the backup, when I was in college, I did a podcast called The Entrepreneurial Report, and please do not look it up. It is awful. It was so bad. I was in my dorm room just with a cheap condenser mic, and I say condenser for anybody who understands microphones because it absorbs all the sound. So like we're talking right now with a dynamic microphone, so it is just recording what I'm saying. But I was in my college dorm room and it was recording all the echoes. It was awful audio quality. But
Hey,
I
you
was
can
going
only
around.
afford so much in college, man.
Absolutely. I couldn't afford rental properties like some of the people that I have on my show now, which is just kind of mind blowing. But what I was doing is I was running around the city of Chicago, interviewing people who are in the startup world, anybody who called themselves a founder or a venture capitalist. And there was a wide range on professionalism and people actually running a real startup and people just kind of running around pretending. But what I learned is that when you've got a platform for people to speak from, it makes them feel really good because they're able to talk about how smart and how brilliant they are, even when they might not be all that smart and all that brilliant. That was one of the lessons I had to learn with that show was I have to go through and kind of call to make sure that I'm getting real people on the show. It's kind of one of the responsibilities for having a platform.
Yep.
But all these really high level people all of a sudden were like, yeah, I'll take your call, I'll take a meeting, I'll be on your show. And so I was like, what if I could do something similar with that? Like, and get that kind of that network, but do it in real estate, which I'm really passionate about. And so I get out of it, I get a wonderful network. I get to talk to individuals such as yourself, and people who listen are able to hopefully walk away from every single episode knowing how to buy more properties, manage them better, and ultimately thrive is our tagline.
Yeah, no, I think that's awesome. And your Twitter, you're really providing some great content there. So not only your podcast, but I know you're across all platforms, but like we were talking about before we started this, you're going to back off, and you mentioned it briefly, but you're going to kind of step away from the other platforms for now and really focus in on Twitter. Why Twitter?
I love Twitter for a number of reasons. It's really easy to execute against. So I started out with Twitter. And when I started reselling to REI 18 months ago, I started with a Twitter because it's super easy. You have a thought, you type it out, and then you push it out there to the world. When you get into some of these other platforms like Instagram and TikTok and YouTube, there's just so much development that goes into it. Coming out with an idea for a video, and then building the video, and then editing the video, and then posting the video, and doing all this stuff. And you're doing all this work, and it's just I was seeing some traction, but it wasn't like Twitter. It was just easy, right? You have a thought, you put it out there in the world, people engage with it. And my whole deal, my whole brand is not for me to be a guru, and not for me to be like this real estate genius. I mean, again, I've done it for 6 years and really only operating it within the last 3 years. So I don't want to kind of hold that mantle. I want to have a position where other people come on and they talk about what they're doing in their business, lessons that they've learned, situations that didn't go right, and kind of what we can all learn together. And you really can't have that dialogue on other social media platforms. With Twitter and with Instagram and TikTok, it's all about like me.
Yeah.
Nobody really goes through and has like deep discussions in the comments like they do on Twitter.
Yeah, you can learn so much on there, almost too much. Sometimes you got to really nail down what you're looking and trying to do, but
Absolutely.
it is impressive, and all the open information and the available information that everybody is so willing to share and help with has been mind-blowing to me.
Yeah, what I like to say is there's that old adage that you're the average of the 5 people that you spend time with. And I think that so much of what we're doing is virtual, and so much of our headspace is virtual. It's like where we spend our time on social media, YouTube, podcasts, and all that stuff. So I also say that you're the average of the 5 content streams that you consume, right? So if you're only consuming just funny TikTok videos, it's like what Earl Nightingale said: if you're only thinking about nothing, you become nothing. Yep. So that's why I think that's really important with your social media, is to kind of police it and try and find, these are the lanes that I want to succeed in. So let me find the influencers, let me find the content providers within those lanes on those social media platforms, because we're all going to be on social media, right? Mm-hmm. We're all going to have an Instagram, probably. We're all going to have a TikTok. We're all going to have a Twitter, or at least one of them. It might as well help keep us focused on our goal.
Yeah, you get too spread thin. And I know other people maybe not agree, but I completely agree with you. Is I would rather go really hard on one, maybe 2 platforms and just crush it, versus trying to put it across all different platforms. It just doesn't, unless you have a whole team, everything else, we don't have enough headspace for that, let alone time, everything else that we've got to do it. So well, I absolutely agree.
And what I like about Twitter is you can compile lists, and they're very good. Their algorithm isn't trying to send you down other rabbit holes. Whereas the other platforms, I feel like you can follow a bunch of real estate guys or whatever you're into, and you see some of that, but they're always trying to send you down some other path, and you get trapped in it. Whereas Twitter, you can very easily just narrow it down. I want to talk about this subject with this kind of person, and it's going to feed it to you.
Yeah, and I think the whole discussion element of it too is really, really helpful, especially for newer investors. Mm-hmm. So the whole segment, the whole subset of Twitter, we call it retweet, real estate Twitter. and they're just some great content providers. So if you really just follow one person, you can kind of figure out like who is all in this community. So like myself, Adulting is Easy, the Frugal Gay, the FI couple. So if you just kind of follow one of these persons and you see who they're interacting with, you can kind of quickly build out this whole community that you can follow. And if you have a question, right, like you can just shoot them a DM, you could shoot them a comment, and if they're not going to answer it, other people within that community will answer it. And it's just been so like anything that goes wrong in my business, I feel I'm so blessed because I've got 8,000 people who follow me, and I've got other people I could reach out to and just say, hey, how would you approach this situation with this tenant? Or how would you approach this situation with the contractor? And you'll get, 4 or 5 different thoughtful answers.
Yep.
And it's just, I mean, it's invaluable.
And they're real thoughtful. It's not people, you're always going to have the people out there that are going to harass or just be there to try to ruin your day for no reason. But for the most part, you're going to get really, down to the dirt answers where these people are going to go through so much detail. You're going to know everything about what you just asked and probably learn a lot more. It's impressive the amount that people are willing to give on there, which I'm the same way. I always try to provide anything people ask me. I'm going to tell you as much as I know. But I'm looking at some of these responses we get on Twitter, and I'm like, man, these people are way more in depth than I am. And I thought I was good at giving information. It's like, wow.
Well, Dan, let me ask, what is your Twitter strategy? Scott is always dogging me because my Twitter game is weak. What is your Twitter strategy? Do you have like, I want to send this many tweets out a day, or is it just a natural, I get on there to talk to people?
So I started out on Twitter, and like I said, 18 months ago, and it was just me tweeting stuff out, throwing stuff out there, throwing stuff out against the wall. And then what I started to do with the podcast is I started trying to put everything everywhere, right? Twitter, like Instagram, TikTok, like I was saying. And in order to do that with one person, right, not having a team behind me, it just made everything had to be cookie cutter. Everything had to be cookie cutter. Everything had to be scheduled out, all planned out, and all this stuff. And then I try to be like really fancy with it. So I use this platform called Zlappo, Zlappo, where if I got 20 likes on this, it would automatically like put my like link tree and said, hey, if you like this tweet, go find all of my other stuff here. And what I found over the last couple of months is that I wasn't really growing, and it just felt more of like a job. And it's like, man, I got into Twitter and I love Twitter. Like what's going on here? So I'm like, screw it. Not doing Zlappo anymore. Everything is going to be organic. I'm not doing anything. And I think that the Twitter algorithm really likes that. But when it comes to my strategy for posting stuff, it's all about trying to get people to interact. It's all about asking a question or putting kind of like a thesis out there and seeing what other people have to say. Sometimes people shoot me DMs and saying, hey, I've got 20 followers and you've got whatever it is, 8,000 followers. I'm having this problem. Could you ask this question? And I'll push it out. I'll make it anonymous if people want. And it's all about getting people to just to think about it and then to put their own 2 cents into it. And that the algorithm really likes it because it gets engagement, and other people really like it because they're able to kind of see what other people are doing in their business and, what tips other people can provide. So I just want to build the platform, right? Like my whole deal is to build the platform. People come on, they debate each other, they bring in their ideas, they talk about what's going on in their business and their investing career. It's not all about me. And that's, I think that what's different about Twitter compared to Instagram and TikTok, where it's all influencer based and you're just waiting for them to talk about that course that they built or take a $1,000 half-hour coaching call with them. And it just rubs me the wrong way.
Yep, I couldn't agree more. And Ryan's not even like cookie cutter good. Like he's below a cookie cutter, man. On Twitter, it's really freaking bad.
Well, that's good though. That's what I'm saying. Cookie cutter isn't. It's like once you see the pattern, you see the pattern everywhere, and all you can see is the pattern. You don't actually see like the individual details.
Yeah, he's not very good with patterns. He failed that in high school, or elementary school, I guess. So let's talk a little bit more about your investing strategy. So you've got several in Milwaukee, it sounds like. Are these all single family? Do you do some multifamily? What's your strategy? How do you go about it? What got you into this?
So it's a long story. So how would you like me to approach it? Like, how do I get into it, or what's my current
Yeah,
strategy?
let's start with okay, how did you get into real estate, and what piqued your interest in it?
Sure. So let me back up to the podcast that I did in college. I was able to get some sponsorship revenue from people who wanted just to be in the startup world. Uh, it's funny enough, those sponsors, their whole deal was, we'll pay you a couple $100 a month, but we're looking to get this person, or we want to have conversations with this type of entrepreneur. So you're networking all over the place. And when you find this type of individual, do an introduction for us. And it was great way to make some beer money, but it wasn't enough. And I didn't really see a pathway to be able to scale it and grow it. I mean, if I went back what I know now to then, I'd be like, dude, this is what you gotta do. Da, 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 da. Like, you could really blow this out. But when I was there, I was like, okay, I'm making a couple $100 a month. I'm graduating at the end of next semester. How do I play this out? And so what I did is I used it just as a great networking tool to get the best job possible after I graduated. So I would have these interviews with like really successful companies and be like, hey, are you hiring? Could you connect me with somebody? So I got connected to all these people, all these really cool startups here in Chicago. And one of them that I got connected to one guy who led me to another guy who led me to like the head HR person for this medical startup called Outcome Health. And Outcome Health was the leading, unquestionable, the top real startup dog in Chicago. They had raised $500 million the summer that I joined in. Sounds like a lot. I mean, doesn't sound like a lot compared to like Silicon Valley.
It's a lot of money.
It's a lot of money. And it's the second most amount of money ever raised in Chicago startup history.
Wow.
And if you're wondering what number one was, it was Groupon, who raised like 950 billion or million.
Is Groupon even relevant anymore?
I was around their building, and I think that they took the name off their building. I was
gonna say I don't even know.
I'm not an expert on
That's
Groupon.
besides the point.
Yeah. So anyway, I got these interviews. I got rolling with them. I got hired as basically a business development rep, which is like a salesperson, and my whole job was to call medical offices and try and go from Susan, who is like the crusty lady who's at the front desk, to get to Dr. So-and-so, Dr. Smith or Dr. Doe or whatever. And that was really, really, really hard, because oftentimes these receptionists and people working at these hospitals, their main job is to hang up on all salespeople. Because this is a little bit of an aside, but there are so many salespeople calling medical facilities selling anything from Viagra to MRI machines that it's a nonstop flow. So I had to find a way to break through that. So that's besides the point, but I was doing really well. 6 months in, I was at a press conference, and it was the two founders of the company standing next to Rahm Emanuel, the then mayor of Chicago, on the stage. And we were in this beautiful lobby of this building, and they were basically doing the ribbon cutting of them locking up like a 10-floor lease of this giant skyscraper. They're going to have their name. It was going to be Outcome Health Tower. And it was like, oh my God, this is so cool. I have attached my wagon to a rocket ship. This is great. I'm gonna be making $300,000-$400,000 a year as a sales guy. And if I want, I could be the sales director of Outcome Health, Illinois, or whatever the case might be. Like, this is kind of what they were throwing around. Is we're gonna grow, we're gonna expand, and you're all gonna get stock options. You're all gonna be rich like all those early Uber and Facebook employees. So that was on a Wednesday. On Thursday, I looked up from my desk, and about half the sales team was gone. And I looked over to the account executive that I was working with, like I was, setting the meetings for him, and his head was in his hands, and he was shaking a little bit. And I was like, Devin, are we late for a meeting? Like, what's going on? And he said, no, Dan, half the team got laid off. And I didn't. I was like, we were just at the ribbon. Like, what are you talking about? So I was like, okay, this is a good time for a well-timed joke. And I said, well, good. We've been working so hard. We deserve time off. And he's like, No, Dan, they're
That,
going through and they're doing layoffs right now.
that'll rub
And
the wrong people the wrong way.
yeah. So what ended up happening is we got pulled into a conference room with our sales manager who was 30 at the time. And myself with the remaining of the sales team, I should say. And she said, there's going to be some fake news going to be coming out in the Wall Street Journal. Don't talk to any reporters. And a guy, who's probably 28, right, raised his hand and said, what does a reporter look like? Does he have like the hat, like with the little thing on the side that says press on the side of it? Is that like an old school camera with like a little notepad? And she's like, I don't know what to tell you. So that started about a 2-month death spiral for the company. What ended up happening is, and I'm able to talk about it now because the executives were found guilty and were sentenced and were going to prison. And it was just, it was kind of like, it was kind of like Theranos, just with accounting. Like they were moving money around. They were raising money fraudulently. They were pulling money out. They were giving a separate book of separate book to the accountants. Not this is a Ponzi scheme, and it's kind of sad because the technology was really, really cool. It was like this touch screen and these TVs that like really helped you visualize very complex medical situations. Like it would do a whole 3D rotation of your chest if you had like cancer or something, and it could walk through the different stages of lung cancer. But that experience taught me that there's no cavalry, right? Like I got to be in charge of my own destiny here. And that's what led me down the road of really researching then passive income. But we all know that passive income is kind of a myth. And it kind of led me to real estate. And that was like day one, hour zero, right, on that 3-year journey of me learning, how do I become a good sales individual? How do I save money? How do I understand this weird world of real estate? How do I build out a team? So it took me 3 years to get to the point where I could buy that first rental property. And then in year 1, I was able to buy 3 properties. Year 2, I felt like a total bum because I was only able to buy 1. And then this year I bought a duplex that is an incredible asset that I'll probably hold forever. That's going to allow me to house hack and cut my living expenses down dramatically.
And that's in
Chicago?
Chicago?
That's in the western suburbs of Chicago. So that's kind of the story on how I got onto this kind of
let's
weird
step
and
back
wild
real
roller
quick.
coaster.
So you said passive income is not really passive. Could you explain to everybody what you mean by that?
So passive
I
income,
would agree with you, just to throw it out there.
So passive income is this whole idea that if you spend any time on like Instagram or TikTok, you'll find people who are talking about how easy it is to make money. And you just got to do this one thing, and you got to buy my course and do this and that, and you'll be making money. You'll be living on a beach, and you don't have to do any work. So it's the whole idea that you're going to make money without doing work. And I say it's not real. I guess that's not exactly honest. I guess
it's exaggerated, though.
I mean, you could do dividends, right? There are ways that you can make money without having to work. But in order to be able to make that meaningful, you have to have hundreds of thousands, millions of dollars in a dividend account, because you're only getting like a couple cents per share or whatever the case might be. So you got to do a ton of work. You got to sweat and just hunker down to be able to build that portfolio. And then at that point, you have to also kind of manage it, right? Like, is this company, like, is Comcast, with the Comcast dividend, is that the right choice for right now, or should I move stuff around? So that's kind of my stance, is that, who cares what it's called? Just go out there and make money. Go out there, be smart with your money, make sound investments, make sure you're not losing money, and just continually study.
Yeah, and I think in the real estate world, it's been TikTok and influencers have kind of put this exaggeration on investing overall, but really in real estate, and how easy and how simple it is to just make all this money. And the reality is, if it was really that easy, well, I guess in the last couple of years, almost everybody seems to have been doing it. But it's not as easy as it sounds, and it is not passive. That's about the last thing real estate is, to be honest. real estate is very cash heavy in the beginning, especially. Unless you're starting out with a ton of cash, you're typically buying lower grade properties, B, C class properties. So then what do you have to do with the B or C class property? Well, you got to fix it up. And there's ways of doing that with as little cash as possible, but it still takes money. And then what happens? Well, typically, if you have these lower class properties, you're going to get tenants that might not take as good care, not always, but sometimes. And that could be in any class property, I guess. But the reality is anytime a tenant turns over, you're going to have some cost, and you're going to have management costs. You're going to have things that break constantly. I've bought houses, and the day we buy them, AC units seem to go out a lot, and it just is what it is. That stuff happens, but it's not passive. And when you're making maybe $100 a month in passive cash flow, passive income, one thing goes wrong, and there goes all your cash flow for the next 2 years.
The other side of that is to get passive income so that you can go lay and hang out on a beach. How good of a landlord are you going to be?
Yeah.
And I think that's what a lot of people miss. They talk about the spreadsheet, they talk about the cash flow, but nobody really talks about the responsibility that it is to own real estate. You are responsible for the four walls, the floor, and the roof of a place that a family might be raising kids in. People come home from a tough day at work. It needs to be comfortable. I mean, it doesn't need to be, custom cabinets and designer everything, right? But it needs to be comfortable. It needs to be safe. And I just cringe when I hear people talk about how easy it is. And it's just like, well, what type of landlord are you? Yeah. Right? Like, are you really taking good care of your properties if all you're doing is just trying to buy enough passive income so you can go hang out on the beach?
Well, and like you said earlier, typically the ones that talk about how easy it is and how passive it is are these people trying to sell a course or trying to sell a coaching program or a session. They want, they're trying to lure people and, oh, it's easy. I got 300 houses and I take 6-month vacations every year and blah, blah, blah. But in reality, that's just not the case.
Absolutely. And
a lot of fake personas.
Things just happen. Things break, and it's been very good to me. And real estate is a very forgiving asset class. But I'm very skeptical of anybody who says that, why do you buy real estate? Why are you choosing this path? And they say, oh, well, I want to retire and hang out on a beach when I'm 30. It's just like, that's not the mentality that is conducive to being successful, because it's really, really hard.
It is. And the only way to do it like that is if you just have a ton of capital that you ran into somehow, or maybe earned really young. But even then, it's still very hard. I don't care how much money you have. It's still not extremely passive no matter what. Because even if you're just an LP in different opportunities, right? So you're a liquidity partner. Even then, you've got to review stuff. You got to look at spreadsheets all the time. You're trying to understand. Really, you should be doing a ton of research on these projects and interviews with the GPs, everything else. So it's really not passive in any way.
Absolutely. And I like that you brought up LPs. I mean, how many LPs are just going to get absolutely crushed? Yep. Right. How many deals have been done that made no sense in an environment above 4% interest rates? I mean, I think that I posted something that the Wall Street Journal came out, and it's like this guy, he has had to foreclose on like 4 buildings, 3,000 units, and he was big on YouTube and got into syndication because it was a thing to do.
Yeah.
And people who didn't know any better, and I feel so bad. I feel so bad for all these people who thought, right, like, okay, like real estate, it's so easy. I'll be an LP. I don't even have to do anything, right? Passive income. And then all of a sudden they're like, wait, like commercial debt, you have to, that's not 30-year debt. Like that's 2, 3, 5-year debt.
And not understanding that. So yeah, again, we can get on that tangent all day, but the reality is real estate is not passive. So let's talk about this house hack. House hack has been a term that has become very popular the last couple of years. It seems like everybody's trying to do that now. Explain what house hacking is and kind of give us more of a background and rundown of your exact project. So you bought a duplex. Tell us a little bit about the numbers and what you're doing to it and what it's going to turn out to be for you.
Sure.
How'd you found it as well?
Oh, that's easy. I didn't find it. My wife found it.
Nice.
Got yourself a good one.
But so let's go like you said. So start out with what a house hack is. House hacking is where you buy a property and you're somehow able to offset the cost associated to yourself. So that way you're able to live and your biggest expense, which is typically housing, is is less. It could be zero, and in some very rare cases, you could actually be negative, which means that you're getting cash flow. Very, very rare, even though people like to talk about how easy it is. So an example would be you buy a duplex, a 2 unit, you live on one side, you rent the other side out. And if you buy just a really just junked up duplex, you might be able to bring your housing costs to zero, so you're technically living for free. But there's a number of ways you can do it. You could do a duplex, triplex. You could do apartments if that's at your whole deal, if you've got the money, or you could even do co-living, and that's what I actually was originally looking to do way back when, after the days of outcome health, when I first started researching real estate. I was going to buy a 2 bedroom, 2 bath condo here in the city, and then get a roommate. And thankfully, I did not qualify. Long story. Long story on that. So the property that we found is in one of these just gem of a neighborhoods in the state of Illinois. It's, top 10 school district, one of the safest. The houses, single family houses there pretty much start at 600,000, and at 600,000 you're going to have to do some work to it. It's probably going to be fairly dated. And so my wife was just scrolling through a Redfin one day, and she's like, "Hey, did you see that there's a duplex?" And I was like, "There's no duplexes in that town." And she's like, "There's a duplex." And she sent me the link, and I was looking at it, and it was $730,000. And I'm like looking at it, I'm like, is there a way? Is there a way that we could make the numbers work on this? And I'm looking at it, and I said, I'm gonna call up the agent. And she's like, "What are you talking about?" I'm gonna call up the agent. I'm gonna call up the agent on this property. And so I called the agent, and I said, "Hey, I'd like to take a look at this property. And, by the way, I'm not represented. I own property in Milwaukee. I don't really have a good agent here in the city. I shouldn't say a good agent. I'm not represented by anybody." And so we ended up working with his team. So they got both sides of the commission, which I'm sure that they were pretty happy about. And it started a very long closing process. I think that we got an offer accepted in January, and we closed on May 1st. And then we'll ultimately move into the property sometime in September or so. And it is a really unique duplex. So it's 2 units side by side. So it's not up, down. So nobody's living above or below anybody. We share just one wall. And the back unit is like this it's the former owner's unit, and it's kind of crazy. It's 2,900 square feet, 4 bed, 2 bath. It's got like the back opens up to an enclosed backyard that's got a recessed pool, I think is the name of it. So it's kind of above ground, but mostly below ground pool. You follow it out, it goes directly into a 2-car garage. So, and then the front unit is a 3 bed, 2 bath, hasn't been updated since the 90s, had plenty of animals living in it from previous tenants, and it smells like it. It smells like money. And then that unit is it's got a 1-car garage, in the back, but there's no private, space for that front unit. So what we're going to do is we're going to rent out the back unit, rehab the hell out of that front unit, and then live in the front unit. And eventually one day we'll switch, and we'll go and live in the back unit and rent the front unit out in a couple of years.
Very nice. So what'd you end up getting it for?
So we ended up getting it for $730.
Okay.
And
what took so long?
The only person that could buy this property was someone who's going to live in it. And it did not make sense numbers wise as a pure investment. Because that front unit was tenant occupied, way below market rent, and their lease was up on June 1st. So, and it was active. They basically listed it shortly after they had renewed their lease. So from an investor perspective, it's like, okay, I'm going to buy this huge property. It's not really going to cash flow, and then I'm going to have to do all this work on this front unit, and I'm going to have to inherit a tenant. So, and then they started out super super high. I think they started out like 850 or so, and then they started dropping it down. And
That's
then
a terrible strategy for anybody listening. Starting high almost always kills you.
Well, shoot for the moon, right? We have had a couple of crazy years in real estate, so
I guess, but I could tell you from
I don't knock the
experience and
hustle.
the amount of transactions we do, people that start high almost always bring in less money.
Uh-huh.
Almost always. I don't actually do not recall one time that if they started high, we could have sold it for more than likely than what we did at the end of the day. Because people start questioning, why is that property sitting? Why are they dropping the price? What's wrong with it? When really there's nothing wrong. It's just we started too high. But now people have fear.
Well, as an investor, I always like seeing stuff that's been on the market for a little bit too long.
Exactly right.
That's honestly, and I mean that's probably great advice, because when we saw it was on the market for like 60 days. I'm like, nothing's sitting in this town for 60 days. Nothing's sitting in this town for 2 weeks. Like what's the problem here? And so we originally thought it was the pool. We thought that the pool was scaring away investors. And then we bought it kind of in spite of it. And we're like, there's a pretty good chance that we're just gonna rip out that pool. But then we're like, we kind of want to have a pool when we make the shift over. And then after we bought it, everybody was asking about the pool, right? Like prospective tenants were like, this is the place that's got the pool, right? I'm like, oh yeah, this is the place that's got the pool. It's, let's go show you this amazing private backyard. So that pool actually helped us rent it fairly quickly. And we've got, it's a little bit too early to say, but we think that we've got a really, really good family that's going to be moving into that side.
Good. That's awesome, man. Well, congrats on that. So how much work are you having to put into it?
How much work, or how much into it?
How much? Yeah. How, roughly numbers wise, what's it going to look like on cost to get it kind of renovated and ready?
Yeah. So that front unit, the back unit was an owner's unit that needed, I mean, it needed some plumbing work, which was a couple grand, which is just fun to see the price of copper. So we put a couple grand in there just because it was galvanized pipes. The front unit is going to need a considerable amount of work. We've gotten some quotes from some general contractors that the 40 to 50K range. New flooring, new kitchen, new bathroom upstairs, ventilation work. A lot of it I'm going to try and do myself, and that's kind of where I'm at now. So I think that I'll just act as the GC. We're gonna work with individual contractors on plumbing and flooring and some carpentry work, and then try and do as much of it as I can. So it's going to be less than what we originally were quoted at. So it's probably going to be somewhere in the 30s.
Okay.
But
so
it's all I do, right? Like remodel never goes on time and on budget. So ask me in a couple months.
Yeah, that makes sense. You think you'll be under 800?
Yeah. Yeah, I would yeah. Well,
what is something like that lease for up there? And obviously you got some unique things with the pool and everything else, but roughly.
That was a real big trick. And I think that was the other reason why it sat, is because a duplex, there's not a lot of duplexes in this town. And so when you do like the rentometer on duplexes, it's like there's just nothing. So you expand out the circle and you go into different towns that are nice, but not that nice. And so there's just no comps. There's no comps for it, especially with a private backyard and a private pool. So we were being told anywhere that, you'll be able to rent it for $5,000 a month. And then we heard ranges anywhere between $3,000 and $5,000 a month. And we're like, the numbers work. They don't work at really $3,000, but we could probably get 3,300 for it. But we listed it at 4, and we took it off the market after 4 days.
Nice.
So we were blown away by the number of people who came through and were highly qualified. I mean, we had senior VPs, we had lawyers.
That's awesome.
Taking a look at this property. So we were like, and
very nice, man.
That's exciting. There was a pool. Thank you.
Yeah, that's really exciting. So what's your goal like? So you want to be a real estate investor. Do you, look at in the future? Do you think you'll try to raise money, syndicate? Do you think you'll stick with the small multi-residential? What's that look like?
I'm going to stay with on the single family, small multifamily. I love those asset classes. I mean, the properties I have up in Milwaukee have just been treating me very, very well. I don't think I'll syndicate. I don't think that I'll go that route. I mean, time will tell. Maybe I will. Maybe I'll raise some private money. Um, but the reason why I like it is just because the debt structure, right? I like 15 to 30-year fixed debt. That's what scares me about commercial, is not being able to have debt fixed long term. So that's why I think that's kind of the lane that I like, and for now that's what I'm going to stick in. I think I'm going to keep buying properties up in Milwaukee. I might expand my footprint down here in Illinois, even though it is a little bit more of an expensive market. But that's kind of where I see the future for me.
Do you think you'll eventually be full-time in real estate, or?
Absolutely.
Yeah.
Absolutely.
Real estate investing, I should say. I apologize. Just on the investing side.
Well, I think that, people talk about passive income and all this and how you spend no time. I mean, with real estate, the idea is I'll build a portfolio, and it's not going to be a 40-hour a week thing. So I will then do Resilient REI, the podcast and the Twitter full time. I've got some really cool ideas of what that could look like down the line. So that's kind of like what I'm building towards. And I think that it kind of goes back to that initial conversation that we were having, that if you go into this whole personal finance, retire early world, and your whole goal is to move and just hang out at a beach all day and drink Mai Tais, like, you're going to fail. The people who, in my experience, who are able to hit that goal and be able to be a full-time investor, they're doing other stuff. They've got a podcast, they're building their own company, or they're syndicating, they're busying themselves doing stuff. They're not just, fucking off to a beach for 9 months a year.
Yeah, let me tell you, I've been a full-time investor for 7 years, 6 years now. And plus, just in the real estate, plus multiple other industries, investing, building businesses, and none of it's passive. I haven't taken a penny out of it. I mean, it's continual having to throw money at stuff. So there's nothing passive, right at this point. Now, more power to people that can come in, crush it right away. And, if you're comfortable and can take off and sit on a beach, that's awesome. But most of the time, people that are wired that way aren't probably going to be able to sit on a beach for very long either. That's kind of what, my experience and what I see with a lot of the people is they might try that. People that are preaching that more than likely are not telling the full truth, because if they were really that good and that baller at what they did and crushed it so fast, they're not going to be sitting on a beach doing nothing.
Oh, I feel like a lot of people that say that, they're working a job they don't like, they're doing something, every day, they hate going to work. And so their idea is, I'm going to do this so that I don't have to work anymore and just go sit on that beach. But I just don't, it's not realistic.
Yeah. And when I was doing that 3 year, I don't even know what I would call it, that 3 years of graduate level study for real estate, I mean, the jobs that I had, I did not like. I mean, when you're in a sales role at a bad company and you're just cold calling and trying to get, your one call closes, and that's a brutal way to make money. And I found that I've got the job that I'm at now is wonderful. I love the company that I'm working for, and I'm doing very well at it. But I just find myself, it's like I'm building this for my own financial stability. I'm not trying to run away from that thing that I hate, like that job that I hate. I've kind of realized it recently when I was in those jobs and I really hated it. It was just like, okay, I needed, like, the pressure's on. I gotta do real estate. I gotta buy these properties. I gotta get out of the situation.
Mm-hmm.
Whereas now it's just a little bit of a different set of motivation.
Yeah, no, I love that. I think it's so accurate and so true as well. What do you plan on managing all of your properties then, or what's the plan there?
No. I am hooked on the teat of property management. Good property managers are worth their weight in gold.
He said, I am hooked on the tea.
Yeah.
I like that.
And there are plenty of bad property managers out there, and don't think that
Oh,
they're all created equal.
the
Um,
majority are bad, if I'm going to
yeah,
be honest.
but I found the property manager that I have up in Milwaukee is outstanding. She's the best.
Good.
She manages all the rehabs. She's my agent up there, decades worth of experience in the market. I sent her like a listing, and she has either managed it herself. She has been in that property. Like she knows this little niche area of Milwaukee like the back of her hand. And to have a property manager who also oversees your rehabs walk a property and say, okay, this is what it would look like to rent it. This is a tenant pool. This is how much it would cost to renovate. And oh, by the way, here's what we can do to get this deal, and then go back to our office and write an offer. I mean, unless I had a real estate license, I don't know how I could beat that.
Yeah.
That
I
deal.
mean, just that service and the knowledge that she has is worth every penny that she makes. I mean, the reality is people want to talk about real estate agents, commissions, blah, blah, blah. The good ones are worth every penny and more that they make. I promise you that. And they work way harder than what everybody seems to think. Now, yes, the 80-20 rule applies in all industries, in my opinion. And it is, 80% of the work gets done by 20%, and that 20% is worth way more than the 80% of the people that are in the business. But you got to find them.
Absolutely. And, there are so many people who complain about the management fees, which, could be anywhere between like 8 and 12% of gross rent. They're like, oh, I should do that myself. It's like, no, I am more than happy to pay that. I am more than happy to pay that for this individual, this qualified individual, to take care of these properties. So I'll manage.
I always
this
laugh
house
when people tell me or complain about management fees, because we sell a lot of real estate in Kansas City, and I have in the past especially worked with tons of investors, a lot. We get phone calls all the time from these investors that thought they were going to save a couple of bucks managing these properties themselves. Hey, so this broke. So I had a perfect example over this winter. One of my past clients, they were managing them themselves. They had a pipe break. It flooded their crawl space. And they had to get a plumber out there to drain the crawl space. Well, when you do that, you have issue with structural stuff too, because if you drain it too fast, the walls can collapse, right? Because all the pressure. So they had to get it drained out. So they had to pump it, and then they had to fix the pipe. But what we decided to do is bring it up into the garage. But long story short, they had a guy come out there. He charged them, I think, $1,800 just to pump it. My guy would have charged them $400 to pump it. All right. So that's, what is that? $1,400 difference would have paid for an entire year or more of management on that house. And they would have never had to deal with any of the Saturday calls that they get, any of the Friday night calls that they've been getting. I mean, it happens consistently.
That is such a great example.
Maintenance, because we know the right people that are going to do fair quality work for a fair price.
Yeah. And I'm in a situation now where I'm looking at contractors for this remodel, and I'm like, this is really hard. Like, who should I be working with? Is this number fair?
Yeah.
With and if you're looking at a property manager, one of the questions that you should ask in every interview is, how many subcontractors do you have? And try and drill down. How many plumbers do you know? How many carpenters? Yeah. When you work with a property manager, you get plugged into their network.
Mm-hmm.
And
same thing with the real estate.
That's the thing. Yeah.
And we had a guy on the podcast, one of our first podcasts, good buddy of mine here in Kansas City. He said their name is Contractor for a reason.
Emphasis on the con. He said emphasis on the con.
Emphasis on the con. Yeah, I mean, and he's right. And that's sad, because there are a lot of great ones out there. Again, I say it's the 80-20 rule, 20% of them crush it, but there are a lot more out there that are going to just charge whatever they can, just because people will pay it, or because they just don't care. And then they'll take your money and run. They're not do things right. Like, it's a tough industry. So one or two bad contractors, emphasis on the con, you can really lose all cash flow for many, many years.
Absolutely. That's the importance of getting plugged into the right network.
Yeah.
And,
no, I
and
well,
this, and discourage you from keep going. If it hits you hard enough in the pocket, you're not going to want to get back on the horse.
No, you can't. A lot of times, like some people I've seen get crushed, what they're paying these contractors to come out there and do some of the work for them. It's just absolutely asinine. But they do it because they know no better.
Right. Well, Dan, we appreciate you coming on. Is there anything else? Definitely, we want to, where people can find you, your Twitter and stuff like that.
Sure. So you can find me on Twitter, Resilient REI.
I really recommend following him, guys. He's got great content.
Oh, well, thank you for buttering my bread. And then my podcast is Resilient Real Estate Investing, which you can find anywhere that podcasting are sold, even though it's free.
Yeah, no, I'll be on there someday. We'll see. I'm waiting on my invite, guys.
We'll figure it out. We'll figure it out. We'll connect offline here.
Yep, sounds good. Yeah, hey, we really appreciate it. Ryan, you want to close it out?
Yep, we'll link all of Dan's and Resilient REI's information in the description below. Dan, thank you so much again for coming on, and thanks for everybody listening to the Xplor Show. Please like, subscribe, and comment wherever you listen to podcasts. And as always, we'll catch you on the next one.